Okay, you're welcome.
Great. There's all that going on.
I'm here today at the Newport Beach Association of Realtors teaching residential realtors how they might break into commercial real estate. It's not necessarily an how to do commercial real estate, but what are the kind of questions you need to be asking your clients, your residential clients, so that you might have commercial opportunities with them? What are some of the really important terms for you to know so you feel confident when you're on the phone with clients and with brokers? So it's an intro course, and I hope that at the end of this, that realtors walk away feeling a little bit more confident and hoping that they can realize that they can expand their business, maybe even double it, by knowing just a little bit about commercial real estate. Thank you guys all for coming today. 2 goals. Number 1 is I want you to realize that you can actually expand your business, maybe even double your business by doing commercial real estate. And secondly, I want you to just feel comfortable with some of the terminology and some of the processes so that when you have the opportunity to have a conversation with a client, that you feel intelligent, that you feel like you know what you're talking about, not necessarily the information you need to get the process started. So that was my inspiration. I love helping residential realtors learn all about commercial real estate. Probably half my business is about commercial through my family. So my father is a longtime Orange County real estate investor, and after I went to business school, came back to California, and I started all of his properties. So I learned about it by accident. It wasn't something that I really focused on, but after serving clients in the residential world, I realized, wow, there's so much opportunity. I think that one of the things to think about is that all of your clients that you have now could be potential customers for commercial. So quickly, I kind of gave you my background already. The opportunity for you is really to expand your business, and it would be amazing if you could double it. I'm going to talk a little bit about how you can do a discovery process with your existing sphere of influence, and then kind of how you take them through a question and answer to understand what their need really is, and then some of the things that are different about commercial. So these are some of the properties that I've listed and sold in the last year or so. 9-unit residential multifamily property in Huntington Beach. We've got industrial properties in Anaheim and Costa Mesa. Those are my kids a long time ago, but I've worked on residential infill projects where you might have a site that is something and the higher and better use is for residential development. So we've torn down properties. This was the Sandman Motel, which was really disgusting in Anaheim, a lot of weird activity there. That is now a beautiful project. We partnered with an affordable developer who built a senior housing project. And then work with a lot of investors. You probably hear triple net a lot. So these are great. We helped a client buy an Armstrong Nursery Center in Anaheim last year. And a Circus Tricks is now called something else, but an indoor trampoline park. They don't own the businesses, but they own the building, and the tenant basically pays for everything. So those are the kinds of properties that I've worked on and that I've helped my family and other realtors and other clients. So those are the kinds of things I'd love for you guys to learn how to do. Also, we just recently sold a church, and thanks to Leslie. And Leslie had a client who had the opportunity to sell their church, 2 acres near South Coast Plaza, and we were able to work together and find a really cool creative solution. The church had been there for over 50 years. They didn't want to see the church torn down. It would have been ideal for a developer to come in, scrape it, and build apartments, but the church really wanted to stay, and they wanted a home, and they felt ingrained in the community, even though their congregation was small. So we were able to find an investor who was able to let them stay, move them to a back portion, and then reinvigorate the main sanctuary with a Spanish-speaking church, and it's really cool. It's just really cool to see the history preserved. So it took a little bit of time to get there, but it was a great opportunity. Medical buildings are in such short supply, and I would say if you were to pick 2 categories to focus your energy in trying to get commercial real estate, I would say your current clients who might be interested in buying multifamily properties and doctors who want to buy buildings that they want to occupy and then rent out the rest. So that seems to be our primary business, or the easiest, I hate to call it low-hanging fruit, but you'll have the most opportunity with those 2 categories with your current client base. All right, so the way you can discover the opportunities with your existing sphere of influence is basically connect with them and talk to them about if they have commercial needs. I'm going to talk to you about how you ask them questions to figure out what their needs might be. I'm happy to send this to any of you guys. But essentially, you first want to let them know that you have this expanded capability, because a lot of residential realtors refer out commercial deals, or they don't even realize that they're a resource for that. So a client will use you to buy their home or sell their home, and then they'll call some other guy at a commercial brokerage, mostly men, so that's why I'm saying guy, at a commercial brokerage, and use that person for that service. So it would be great for you to shift your mindset and realize that your client can be captive. You can help them do everything as it relates to real estate. So the way that you become initially a resource, especially when you're newer at this, is you share a lot of great information. Up here I have a sample. I'm sorry that it's blurry. I don't know why it looks blurry up here, but I'm a member of a lot of different organizations. I have a lot of different subscriptions to commercial real estate resources, and every quarter they come out with these really great reports that give you stats in any category. So this happens to be the Orange County Multifamily Report, and it's 30 pages long of statistics that someone who's an investor would appreciate that you provided. But by sharing this with someone on a quarterly basis, you become a resource for them. And some people really nerd out on the stats. There's like a cover page in this report where if you just read the cover page, you would feel more informed. So that when you had conversations with them, if you were talking about what is the average cap rate for a multifamily property in Huntington Beach, or what is the price per unit, or those kinds of conversations allow you to feel more informed. So sending them those kinds of reports is a great place to start. Sending them a weekly email that maybe highlights properties that are in the categories that they might be looking. Articles. I have a membership to something called CoStar. It's like the commercial MLS. It's very expensive, but when you open up CoStar, there are articles that are local and then national and even global. And every time I open it up, I try to read 3 to 5 articles, and I try to send those articles to people that I think would be relevant. I read an article this morning, or I read the headline of an article that talked about Amazon having empty warehouses, and that they're going to be sort of like rescaling what they've got because they have too much space now. So those are the kinds of things that might be interesting to someone who you know is in manufacturing or distribution, and sending that kind of information that they may not be reading in, on the news or in Instagram or USA Today or whatever. And then sign up for this seems really boring, but if you sign up for city council agendas in the cities that you work in, you will learn about new developments that are coming in, new rules and regulations. It's really a very boring thing to be a part of, but actually your clients probably aren't doing that, and it's a great way for you to learn about what's happening in your city or the city where your clients own properties. So those are some of the ways that you can connect with clients initially to demonstrate that you're aware of what's going on, because a lot of clients feel, especially if they're newer, they feel like they don't know much, and then they don't have the confidence, and they want to turn to you as a resource, as an expert. So by using these resources, you don't have to be the person who knows all the answers, but you're sharing with them something that would be valuable. All right, so if you have the opportunity to work with a client who says, hey, can you help me with this? A lot of times, residential agents have the opportunity to help someone with a small retail lease, let's say, or a doctor who needs a small medical office. Usually it'll start with leases. Or it might be someone who wants to expand their business. Let's say someone has, one of our clients has, they make like fences. So they wanted a warehouse in a certain area where they had a fenced yard, and they had office area, and they had places for storing their trucks. So when you're having a conversation with them, and I can actually email all of you guys, I have like a 1-page sheet you can either send to people or you can use to fill out yourself. There's a series of questions that you'll want to ask them. First thing you want to say is, if someone says, hey, I want to buy an industrial building, you'll want to ask them, is this for you? Are you the owner user? That's a phrase. Are you the owner user, or is this as for an investment? Because if they're going to occupy it, then you're not going to want to look for properties that have tenants in place that are going to be there for the next 5 years. If they say, no, I just want to buy this as an investment, like a doctor wanting to buy a medical plaza, then you're going to ask them another series of questions. You want to know what kind of experience they have. So if it's someone who's never owned, let's just use an apartment building, and they say, I have $5 million, find me 20 units in Orange County. You're going to want to know, how experienced are you at this? Because it's not something that you're going to know how to do right from the very get-go. So you'll want to understand what their level is of owning real estate and managing real estate. And then that will lead you into suggesting that maybe we factor in a property manager. If they're newer at this, or especially with multifamily, it's a lot of management, you would suggest that they use a property manager. Property managers aren't free. They usually take 3 to 6% of the total rent. So that's something that your client will want to factor in and understand how it works. Sometimes when you work with clients, they tell you what they want, and then ask you, after you ask this series of questions, you discover that they actually might need something a little bit different. So it's really good to just have a deep discussion, kind of like we all, before a buyer says, hey, I want to go buy a house, we say, have you talked to a lender? Where else have you looked? Are you working with anyone else? We have a series of questions that we all ask. This is sort of the program that you would go through when working with a new client. You're going to want to ask if someone says, hey, I want to buy an investment. Multifamily, retail, office, medical, industrial. The asset class is sort of how you talk about the type of investment. And then everyone has a different, I want a 6 cap, whatever, they all cash flow at the end of every month. Or I only have this much money to spend. So understanding what their financial goal is really important, because everyone has a different opinion of what is a great investment. For example, the doctor that we're working with, he's a radiologist and he has a location in Irvine. He'd like to expand. His business has been very profitable and he has $5 million to spend. And so he asked us, hey, I want you to find us some great investments. He asked me yesterday, how much would a building like the one I described cost? I said, well, we need to take a step back, because earlier in the conversation, you told me that you want to occupy 51% of it because you're getting an SBA loan. I don't know if any of you have heard of that before. So SBA loans require that the investor occupies at least 51% of it. And he said, oh, yeah, that's true. I said, so we're going to have a different criteria when we're searching. We cannot find medical buildings that are fully occupied, because then you won't be able to fulfill the requirement of occupying half of it. So understanding the details of why they want to invest and how they plan on using the building will help you have really great conversations. He basically was asking me, how much is a medical building in Orange County? It's such a broad question. That's like asking someone, how much does it cost to buy a house in Orange County? It really depends on what city we're talking about. So by having these questions where you can really narrow down what it is they're looking for and how they're going to use it, it will help you feel more intelligent. I didn't have a specific answer for him to that question, how much is it going to cost me, but I gave him an idea of the range, and that helped satisfy it. What I did at the end of that conversation was, it sounds like he said he wanted to spend $4 to $5 million. I asked him if he had a lender. He didn't. He said he had been looking online. I connected with a commercial lender. Same thing we do for residential. He's working with that lender to understand what it means to be qualified for an SBA loan. So understanding the differences in mortgages or borrowing money in commercial real estate is important as well. There's different terminology like debt service coverage ratio, where the lender's going to want to know that the income from the property can cover the loan payment, and that the investor also has additional funds to cover in case there's a vacancy and things like that. Okay, so the term value add. A lot of times, we use that to, what is the term? An opportunity to make it your own or whatever. It's properties that might be in poor condition that need remodeling. A lot of time with residential properties, it's hard to do that because tenants are there. So a value add property it's great to ask someone if they want something that's value add or turnkey, because someone may want to increase the value of the property on their own. Other people just say, no, I want the property with the rents fully stabilized at market value. I want everything done. I don't want to do a lot of maintenance. Or someone may say, I've done this 20 times. Find me a piece of junk in Garden Grove, 12 units. I'll give everyone notice. I'll increase the rents. They're way under market. And then we'll maybe flip the property in 2 years. So having those kinds of questions, just like we ask our clients, do you want a home that you need to remodel or you want it totally done? And then asking people, so let's say you're helping someone find a building for their business. You'll want to know specifically how they're going to use that business. There are, within cities require, or cities have a land use map that outlines what is allowed to happen at any property and what kind of uses are and aren't allowed. You've probably heard of conditional use permits, entitlements, zoning. All of those terminologies are important for you to understand. You wouldn't want to help someone find a retail space get them signed in for a lease, they move in, and then they discover that they're not actually allowed to do what they want to do there. So understanding and backtracking and saying, okay, what exactly are you going to do here? So that radiologist, we know that for medical, we might need 5 parking spaces per 1,000 square feet of his building. Parking ratios are another really boring thing, but they're really important for certain businesses. We helped a gym recently, and that requires 10 parking spaces per 1,000 feet, which means if someone says, yeah, I just want like a 2,000 to 3,000 square foot, industrial box, that means you need 20 to 30 parking spaces. That makes it challenging to find that. So it's important that you're aware of those kinds of intricacies as you search for properties for clients, because those can derail a deal, and you definitely don't want to be blamed for putting someone in something that they can't use. So being aware of that kind of stuff, ceiling height. We were recently working with cannabis people who needed a lot of power, or someone who had these shelves that, Michael, what was it? He had these.
You had a hazardous material,
Yes.
so you need to make sure if it was over 14 feet that you have to have fire sprinklers.
Right. So all these kinds of details are important to understand, and the more you ask, the more comfortable your client will feel, and the more targeted of a search you can make, because nothing feels worse than bringing someone into a property and then they say, I can't use this because of this and that, and I told you I wanted this. And so being overly detailed in your questioning is really important, because going into this as a residential realtor, you're already going to feel a little bit nervous, and you're going to feel like you don't know what you're doing because you are not an expert in this yet. So the more you can do to feel comfortable and being really targeted in what you present them, the better. This is an example of the kind of income and expenses, the kind of document you would see when you're showing a property to a client. But you'll want to get familiar with some key phrases so that when your client talks to you about them, you can understand what they mean and not say, let me get back to you on that. Okay, so I want to talk about some of the main differences in commercial real estate. As a background, as a residential realtor calling a commercial broker, you're going to kind of already be feeling a little bit intimidated, because commercial guys just don't really like what they call us resi agents. They don't like when resi agents get in their business. It's kind of like an old guys club. They all do it for 20 to 40 years. Not all, I'm making generalizations, but I'm giving you an idea. Especially if you're a female calling into this industry, it's a little bit unique. So when you call these brokers, you want to make sure you're using the right terminology and you're asking for things in the right way. So, for example, when we sell a house, we make a brochure. Really, in commercial real estate, generally they call it an offering memorandum. So you might send an email and feel like a badass and say, hey, can you send me the OM? Just saying that instead of saying, can you send me the brochure? Can you send me more information on the property? You wouldn't want to send an email like that or call, because that demonstrates that you don't really know the industry terminology. So an offering memorandum is something like this. And essentially, this is one that I made for a property that we sold. It just talks about, there's a summary, there's an investment summary that talks about the general financials that someone would care about. This is for a multifamily property, so there's a rent roll on here that outlines all the tenants when their leases start and end. And then it also talks about current rents versus pro forma rents, meaning what could they be if they were at full market rate. Talk about the income and expenses, and one of the most important numbers you'll get from that is the NOI, the net operating income, and that's the number that you're going to use to figure out the cap rate, which is that number that you hear a lot of people throw around. Usually there's photos of the property. A lot of times there's not a lot of photos of the property. And a lot of times in commercial real estate, you can't even tour properties, well, at least residential properties, until you have an offer that's accepted. Okay, other things, DD. So we think of contingency periods. The phrase in commercial real estate is due diligence periods. So when you make an offer, you're going to ask for certain timeframes to do your investigation. You do similar investigation, you do a physical inspection of the building, but a lot of what you do is ensuring that the property is, that their use is allowable in this site. There's different factors that you might have to do depending on your loan. You might have to have an environmental study. You might have to get a conditional use permit. So you do all of that during your due diligence period. And then zoning, understanding how the property is zoned. So let's say you want to build residential units in an industrial zone. It may not be allowed by right So you'll have to have, you'll go through a process with the city to ensure that the developer can actually build what they want to build. And that's an investigative period, and that's what the due diligence period is. They call it the DD period. Okay, so pricing. So a lot of times, people, when you initially have a conversation with investors, they'll tell you, I want to spend $4 to $5 million. What can I get for that? And I think when you think about commercial real estate, you're going to think about it a little bit more technically. We talk about prices in price per foot. Rents are expressed in price per foot. You know that you're working with a new investor when they say, I don't want to pay more than $3,000 a month, and just find me a space. And you would say, okay, let's break that down. You say your budget's $3,000 a month. How much space do you need? Well, I need 2,000 feet. Okay, well, if you want to be in Costa Mesa and you need 2,000 feet, the average price in that area is $3.50 a foot. So that would mean your rent would be XYZ. That's probably not the right spot. So let's refine your search. Let's think about, what areas are best for you. And so talking with people, helping your clients understand the terminology and the way to calculate things is also helpful, because then when you're communicating, you're talking apples to apples. So prices are expressed in price per foot. Multifamily sometimes is expressed in price per door or price per key or price per unit. And that's just how you talk about, in Anaheim, it's $395,000 a door, versus in Huntington Beach, it might be $500. And a lot of times in commercial real estate, this is super frustrating. They'll put properties on the market with no price, and they'll say the price is undisclosed, which is super irritating, because then your client says, what should we offer? And then you say, well, let me find out. So then you talk to the broker, and if you're in the instance where you're looking at a property that has no price, you'll kind of get the price out of the broker, the expectation, by saying, what is the seller's expectation? Some jerks will say, you should know the comps. But it's kind of like an annoying thing, but it happens, especially on higher priced properties where there may not be, a lot of times on land sellers, and I've done this before, we have what's called a call for offers. So we basically say, we're about to put a property on the market in Anaheim. It's 2 acres, and it is a church, an old apartment building surrounded by apartments and a hospital. And the seller, we had an idea what we think it's worth, but we actually want the market to tell us what it's worth, because we don't want to be way under or way over. So we're going to put a call for offers out and allow brokers and buyers to preview the property and see all the due diligence materials that we've generated. And they'll have 3 weeks to come up with their number, and then they'll all present their offer. And then we'll go through a series of, it's kind of like when we get multiple offers on properties, go through a series of filtering them through. Okay, offers. When you make an offer in commercial real estate, you do it on something called an LOI, a letter of intent. We are used to presenting offers on standardized forms, but you actually negotiate your deal points, the main deal points, not every single one, but the main deal points on a letter of intent. And it's basically like a memo. And I'm happy to share any of these documents with you, but it goes through, talking about who the buyer, the seller. This is an example of an LOI, and I'm sorry that it's blurry. But you talk about that you've been authorized as an agent to make this offer. There's a buyer, there's a property. You talk about the price. You talk about the timeline. And then you talk about the due diligence period. It's very similar to a residential offer, but it's more of a memo. And every broker has their own version of it. And we use it to negotiate back and forth. And once the deal points are solidified on the LOI, then we move to the actual purchase agreement. A lot of brokers use the AIR commercial real estate forms. They're very similar to CAR forms. In these forms, agents and brokers can redline things and mark things out and add things in. So it takes a lot longer to get a property into this document and into escrow, because lawyers like to look through it. Lawyers love to mark these things up. And sometimes people even have their own purchase agreement. They don't even use these standardized purchase agreements, and they just create their own. A lot of residential developers do that. So there's a different process for making offers and opening escrow for commercial. So it's not standardized. If we think about the MLS, sign a listing agreement, and then we say it's coming in escrow. There's a lot of rules and regulations around the timelines and how often we have to update things. When your client is looking at properties on LoopNet, let's say, because a lot of your clients are probably using LoopNet, which only has about 30% of what's available. there's no one regulating how often those are updated. So when someone says, can you just see what's available? Even if I did a search, it may be outdated because brokers aren't required, they should, but they aren't required to update it immediately. And so sometimes something will say that it's been on the market for a year, and so we don't know if it actually has been because no one's forcing them to update it. So keep that in mind when your client sends you something from LoopNet, which is probably what they'll send it from. It may or may not actually be available, so you want to check with the broker before you say, yeah, let's go look at it. Okay, due diligence periods. This is probably where a lot of agents get in trouble. I actually happen to help a lot of agents in our brokerage. I had an agent who reached out to me and asked me to use my forms, and I said, well, are you sure you don't need any help? And he said, no, I have it. So he used the forms, he got his clients in escrow on a property, and then down the line, the client decided he didn't want it anymore. And the agent said, no worries, we can cancel. And what he didn't understand is that unlike residential real estate where we have a physical form that we use to remove a contingency, in commercial, sometimes that removal is passive, meaning the time can come and go, and if you don't say anything, it's assumed that you're fine with the property. So in this particular instance, unfortunately, the agent didn't know that, and they had definitely surpassed the time period for their due diligence, and the client lost their deposit. They weren't able to cancel because the agent didn't understand how it worked. He thought, no, I never removed the contingency. They said, the time came and went, you didn't say anything. And so that's like, there's areas where you can really get tripped up, and I don't know if there was a lawsuit. I'm not sure how it actually ended, but I know the client lost money. There are other things that you do during that investigative period. If you are buying industrial property or land that might be developed, your client is, the bank may want them to do a phase 1 or a phase 2. So phase 1, it's called an environmental study. Think of it like a book report about a property where they'll go back 100 years and use business licenses, aerial photos, history about the property, and know what's been there. We helped a client buy an industrial building in Newport Beach over by the hospital, and it had previously been a glass etching factory. They did tinting and etching and I don't even know what, but they had barrels of stuff all over the place. And the buyer wanted to do, the lender wanted him to do a phase 1. It took a couple of weeks and it's very expensive. It came back clean. It turns out that those barrels were not that bad, nothing had leaked into the ground, but let's say that the report comes back saying, you might want to look into this further. I don't know if I feel comfortable with that. Let's say it had been a gas station or a dry cleaner or something that had an impact on the environment. Then they would do phase 2, which is where you probably don't see these, but you hear this, where someone has to do remediation. So, they would do testing, and they would test the soil or the concrete or whatever other surfaces to check to see if anything was actually toxic or harmful. And if that's found, then remediation needs to be done. And that can take, 3 months or 2 years. It just depends. But that can be a really big deal for your client. So those are the kinds of things, though, that we do during the due diligence period to make sure that the property is a good fit. Again, we also go to the city and we talk to the city about, is our use allowed? And if it's not, what is required to get that going? Commercial, one thing I didn't write on here is that the timelines are a little bit different. So if you're helping someone who wants to build apartments, let's say, and they're buying raw land, it may take them, and they may want 12 months to close escrow, because they are not going to buy that land until they know from the city for sure that that land can be used for what they want to build. So they're not going to just buy it and hold it, usually. So keep in mind that commercial deals can take a really long time. I've had things take 2 years. When I've worked with affordable developers who get all these tax credits and all these benefits, it takes a very long time to get through all of the approvals. And there might be times where, in order to convince the seller to give us more time, we might release part of our deposit along the way. But that process can be a little bit different. So things like leases, they usually take 1 to 2 months to get everything negotiated. The tenant improvement allowance and the business licensing and all of that. But typically, they can be as quick as 30 to 45 days, sometimes 90, but they're not quite as cut and dry as residential. Let's see, I think that's it. Okay, that was the main stuff. I know it feels like I kind of talked a lot, but my goal is for you to just have a quick idea of how it's different and what you might want to talk about. I'm happy to share some resources of the industry organizations that I'm a part of, the subscriptions that I have. So CoStar is one that I use. I spend $1,000 a month on it. So unless you think you're going to do a lot of business, it might not be thing you want to go out and get right away. But CoStar, LoopNet, Crexi is another one. AIR, it's a commercial real estate organization. I'm a member of other organizations like the Builders Industry Association, apartment associations. I attend a lot of different things so that I can learn all the time. I didn't go to school to be a commercial real estate agent. I learned by watching my father. And I think initially when I got into this, I felt really stupid and intimidated. And I didn't know how to say the right words. I couldn't understand how these guys were calculating things so quickly. I couldn't believe that I was driving around these people who want to spend $10 million and they were asking me, is this a good idea? And I was like, I don't even know, you know? So, but I just kept, and that's the hardest part when you get into something new that you feel like you're really out of place in, is you feel like you've got that imposter syndrome where you think, I'm not qualified, I shouldn't be doing this. But if you go through the process of asking a lot of really great questions and aligning maybe with someone who is more of an expert who's willing to be helpful and not make you feel dumb, then it will be a great experience. I work with a lot of realtors who just say, I don't even know what this is about, just handle it for me. And so I also do that, but I love working with agents who are eager to learn because it's really hard to find people who are eager to share. And I find that that's probably was one of the hardest things for me when I was new, is I felt embarrassed to ask brokers what they meant by that, or how does this work, or I don't know what form I use. So I just figured it out all by myself. And looking back, I realized that I probably could have gone a lot farther if I'd aligned with someone who could have helped me ramp up that knowledge more quickly. So that's why I'm passionate about sharing this with residential agents. Our job, helping clients buy homes and sell homes, is really tiring. It's very emotional. It's 7 days a week. It always happens at just the wrong time when you should actually be spending time with your family or sleeping or just watching a movie. And so I also like commercial because it's really more Monday through Friday, 9 to 5. It's not emotional. Very rarely is the buyer emotional, unless they're inexperienced. And people are a lot easier to work with because it's more business to business. So I really love that about it. And I really want to continue to grow my business in this realm because I feel like it's just so gratifying. And it's really cool to drive by a building or a restaurant or a gym or whatever and to know you are a part of that investor's growth.